joins us, head of equity with Axis Mutual Funds. Jinesh, what is your sense? Do you think the peak pessimism is behind us?
I think for India, oil plays a very big role in deciding whether the macros of India will be good or deteriorating, or the momentum will continue. So I think oil, inflation, and currency are the three critical metrics we should look at for India. The good part is at least the oil, which had run up to 130 odd dollars, has come down to 100, which gives some breathing space. As we understand macro, I think oil below 100 should be good to keep the momentum going, and the GDP growth momentum can continue if we don't have a fourth wave of COVID. And if that continues, then I think we are in good shape, maybe 3 months down the line.
So, how much of the oil price surge is something markets are factoring in?
I think if you really see, oil moved from $77 to 130 very, very quickly. It came down also very quickly, and still the geopolitical tensions and everything is still going on. So I think it will be, give it another 15-20 days, you will get to know how this geopolitical tension subsides or it further invigorates. And also by then, by tomorrow, you will know how US Fed also reacts in terms of inflationary pressures. So most of the event which has led to so much volatility will be coming through, and then people will concentrate on earnings. And Q4 is going to be a very, very difficult and challenging quarter for many companies to demonstrate growth and margins. So we'll have to see how things go by from for various sectors. Various companies will have different numbers, and that will decide how markets will really move and how the flows will move to different sectors.
What are you doing in this market? Are you changing your portfolio, assuming that a lot has changed in the last 3 months?
Nikunj, very difficult to take this call because lots happening at one go. I mean, if you see January, you had a big sell-off from FIIs into blue chip stocks. Then people moved from the emerging market funds, what we understand, moved from India to China. And after that, China is down 10%, stocks would be down 20, 30, 40%. So, I mean, the hope is we just chug along well. The quarterly numbers come by, companies are able to demonstrate good earnings growth momentum, and I think money will just come back.
Jinesh, what's happening within the entire new age tech companies? I mean, we've just heard recently that Zomato's got the approval of up to about $150 million loan to Blinkit. Does it seem like this move could be a near-term pressure? If indeed the acquisition eventually materializes, this is going to lead to a significant cash burn. That said, we've already been aware about the kind of price action and the news flow in Paytm. On the other hand, some market experts believe that the valuations have come off quite considerably in the entire newly listed universe, and maybe having a minuscule position to a bunch of these names may not be a bad idea. I just wanted to figure out whether it's even worth that effort.
Yeah, I think we have to evaluate each and every company, whether the space is good, whether management is able to show path to profitability, and whether the capital allocations are made as per our expectation. I think the spaces are good. Obviously, valuation was out of whack given the frenzy in the market, given FIIs trying to buy into these stocks because they have seen so much success all across the world on in this kind of companies. So I think important task would be for companies to really demonstrate good growth, path to profitability, path to cash flows. And if they are able to do it, then maybe some of them will become real winners. If in any case, if they try to the capital allocations are bad, or the path to profitability doesn't come by, then I think at some point people will lose interest in this space.
Fair point. Also, Jinesh, wanted to understand how you're actually maneuvering via the entire banking space, because up until now, it was clear that the leadership stood with ICICI Bank as well as SBI. Now, with the latest move from the central bank removing restrictions on HDFC Bank's digital launches, do you really feel that there could be perhaps a tactical shift of money pulling out of ICICI Bank, SBI and go into HDFC Bank or a Kotak? Or do you think the leadership is going to remain with ICICI Bank and SBI for some more time?
See, I think all 4 or 5 private sector banks are in good shape. Maybe some might be growing at 15-16%, some might end up growing at 17%. But if you really see the ROE construct, if you really see the asset quality, the way they have managed it well, I think more or less everyone is in the same boat. Investors can pick and choose which management they like and where they want more comfort in terms of long-term growth. So I think more or less there is nothing to be, I would say, major uniqueness which you can come out with among these 4 or 5 private sector banks. The idea would be if you want to play cyclicals, I think financial is a great play to be in. It's an evergreen sector. We need 6-7% real GDP growth, and if that comes, then I think you will have 10%, 11% credit growth, and these companies who are gaining market share can grow at 15, 16, 17% for longer periods of time. So I think the problem with this sector was it was an overall sector. You had huge outflows from FIIs, and the large part of outflows came from this sector because it's a liquid stories to come in and go out. I think if FII selling subsides, I think this sector can look up nicely. Also, in the inflationary scenario, private sector banks tend to gain because assets reprice faster than the liabilities, and the NIMs can be managed or NIMs can improve. So I think all in all, they are in good shape. Numbers are looking good. Hopefully Q4 should also be good. It is just that the sheer sell-off has led to the underperformance in this sector, and hope things reverse.
Jinesh, hi there. Good morning. Avan joining in. A lot of the consumption and FMCG companies have been indicating that further product price increases are on the cards as they're battling the raw material price inflation. How are you looking at the overall dynamic for when it comes to margins for these companies?
See, I think it is going to be difficult for many companies to pass on the prices. Companies who are leader in their space, who have 60-70% market share in their product category, I think they will be in a better position. So we are only sticking to those companies who have large market share, ability to manage inflation while passing on, let's say, 70-75% of the cost, and then bringing in efficiencies and managing the margins. So I think the leaders, the strong brands would do well, but the Me Too FMCG consumer staple companies will struggle.
Give us a sense as to where you stand when it comes to the auto space as well, because there is going to be that, there is going to be the commodity prices a headwind as well when it comes to the margins of a lot of these companies. On the other hand, there have been new launches. They are focusing on EV as well. How do you see that taking off for some of these auto companies?
See, I think autos, unfortunately, are facing two issues. First is the chip shortage, and hence the productions are not to the best levels what they would have wanted, despite demand being good after second wave of COVID and now after third wave of COVID. So that is a dampener in terms of production. Also, the ongoing Russia-Ukraine issues, which has led to, again, commodity price increasing, especially some of the palladiums type commodities. I think that will further hit the margins, and hence the raw material cost will continue to remain high. Unfortunately, both has come at the same time. Oil prices also is a big factor in that. So as I said in my opening comment, that oil below 100, I think things can be managed. Even this sector will start doing well. But oil above 100, and if it sustains at, let's say, 120, 130 for a longer period of time, then this sector will be under pressure.
So let's understand what is in store from here. this quarter will be a chaotic quarter.
Yeah.
Some company will have a margin gain, some company will have a margin loss, somebody will have an inventory gain, somebody will have an inventory loss. When do you think markets will be able to, in a sense, look through the clutter, look through the noise? Will it be this quarter, next quarter, in the second half of this year?
See, I think next 2 quarters are going to be challenging because the crude oil price moves, the raw material cost moves. Everything will not get synced in this quarter because there are 30 to 40 days kind of a lag impact. And also we'll need to see how these companies are able to push through that cost and increase the prices of the product for their end consumer. So I think 2 quarters are going to be sort of a challenging quarter. However, as I said, that if things subside on the raw material front, like oil or other commodities, come off significantly over next 1 or 2 month period, then I think the sell-off what we have seen, most of the stocks, if you really see, blue chip stocks are down 15-20%, and the mid and small has come off by 20 to 40% depending on the sectors where they are. So I think the large part of it looks to be priced in, but it will be a gradual recovery, and numbers will come only maybe from Q2 onwards.
Jinesh, while it's easy to make a case why one should be bullish on banks, but the reality or the grain of the truth here is that credit offtake has not picked up. CPI at 5-6%, WPI in double digit, but there is no demand for credit. And if it is not coming now, I wonder when will it come?
See, I think there is too much volatility, too much stop-start happening in the system. So let's take a case that if there is a fourth wave of COVID, then again all bets are off. But if, let's say, things are good, oil comes down, inflationary pressures are not there, even Fed event goes by, then and if the outflows which were happening at least subsides, and then we have a reversal of outflows when there are inflows, then I think people will get into this sector because Nikunj, I think 6 months back, what was happening, numbers were not coming and the other sectors were delivering good numbers. Now, at least from the credit cost perspective, with the way things are, which are much better, companies, at least top private sector banks, are growing at 15 odd percent. So I think numbers will be better as compared to the other sectors, at least for next quarter and in Q1. So from that point of view, valuations are also attractive now, having not done well over last 1 year period. So all in all, I would say it is more of a shift from other sectors to this sector, where the challenge of other sectors will be in terms of numbers, how they really demonstrate numbers given this inflationary scenario, whereas banks would be better placed. And if there is an inflow from FIIs, then I think this sector will have the largest inflows given the weightages what they have.
Well, while it's been a great start to the trading day today and you're seeing across the board strength, there are names like Zomato which are standing sub their IPO price. So that's the kind of move that you've seen on this particular stock. Having said that, it's a great market breadth that you have at your hand, solid in favor of the advances. Chola Finance is up 3.5%. HDFC has scaled up 3.5%. There's Dixon, IndusInd Bank, Axis Bank. They're all scaling up higher, and Balrampur Chini as well after a day's break yesterday. That's back in the green, about 3.6% as we speak. Tata Motors, Bajaj Finance, SBI Life, ICICI Bank, Infosys, Wipro, they're all a sea of green as we speak right now. The ones ebbing off a little bit, they're largely the crude sensitives like an ONGC, that's mildly soft. And pharma is a bit of a lag today. So Cipla, Sun Pharma, DRL, the relative underperformers as opposed to what the rest of the market is doing. But Jinesh, what happens to good old pharma? Because that showed resilience when the market fell. Having said that, it also comes in the backdrop of when pharma was into a time-wise consolidation and didn't participate also in the run-up that the market had to its all-time peak.
Yeah, I think it is more of a defensive play. When oil is at $130, that is the best sector to be in because it doesn't get impacted significantly, and there is a general growth which is in the system, and pharma continues to do well on that front, even if oil is at let's say $120, $130. So I think it is more of a defensive play. When things go difficult, people tend to shift some of their money that side because it's a defensive kind of a nature. However, pharma is, as I always say, one sector, one company is one sector in itself, and hence has to be looked very, very carefully because there are many issues from US FDA front to therapeutic segments where they are growing, how they are growing, what are the pricing pressures in US, and how they are changing their business model. So one sector, one company is like one sector, and hence has to be looked on a stock specific basis rather than generalizing the entire sector.
Fair point. Jinesh, good to have you on the show. Glad that you could take time out as always. 290 points
Pleasure.
higher.